Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the confusing world of business and finance. Today we are dissecting a filing from the Chemours Company, a company you might know for making Teflon and other performance chemicals. Now this is a pretty straightforward announcement, so we won't be digging into pages and pages of financials today, but there is still some interesting stuff here about a big property sale. Before we dive in, if you like getting these clear breakdowns of important corporate news, make sure you are subscribed and also jump into our Discord community. You will find the link in the description below. So Chemours is reporting that on the 15th of January 2026, they signed some agreements to sell 10 pieces of land in Quanyin, Taiwan. This is a pretty significant deal with a total sale price of around $360 million. Now, who is buying all this land, you ask? Well, it is a group of 4 affiliated companies: Century Wind Power Company, Limited Century Iron and Steel Industrial Company, Limited Century Huaxin Wind Energy Company, Limited, and an individual named Mr. Lai Wen Shang. These entities are being referred to collectively as the buyers. Chemours plans to use the money they get from this sale to pay down their debt. This is a common strategy when companies want to improve their financial health and reduce their interest expenses. Getting rid of debt can make a company look a lot more attractive to investors and can free up cash flow for other investments. The actual sale is expected to wrap up by the middle of 2026. This timeline depends on a few things like meeting certain conditions and getting approval from local authorities, which includes checks on environmental factors. The agreements themselves have all the usual clauses you would expect in a big property deal, like guarantees, obligations, and ways to end the agreement if things go wrong. It is also worth noting that Chemours states there are no special relationships between them or their executives and the buyers. The deal was negotiated fairly. This is important because it suggests the terms are at arm's length, meaning they were set through normal market forces and not due to any special connections. Chemours also put out a press release about this sale on the same day, the 15th of January 2026. This is pretty standard practice for material events like this. So what does this all mean? Chemours is showing it is actively managing its assets and its debt load. Selling off non-core assets is a good way to generate cash and strengthen the balance sheet. The $360 million is a nice chunk of change, and using it to pay down debt is a smart move, especially in an environment where interest rates can be unpredictable. Looking at the bigger picture for Chemours, this move signals a focus on financial discipline. While this filing doesn't give us deep financial results like revenue or profit numbers, it tells us they are making strategic decisions to improve their financial footing. This could enable them to invest more in their core businesses or weather any economic storms. Now for our take, Chemours is demonstrating good financial housekeeping by clearing debt with asset sales. The sale of property in Taiwan is a significant move that will likely reduce their financial leverage, making them a more stable company. The main risk here is always the execution of the sale itself, ensuring all conditions are met and the transaction closes smoothly. If they can do that, it will be a clear win. Alright, that is our quick breakdown of the Chemours Company's latest filing. What are your thoughts on this property sale and what it means for the company's future? Let us know in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives like this. And don't forget to join our Discord community linked in the description. Thanks for watching. See you next time.